Welcome to Freed on Business. He grew up in South Florida, has been in business here since the early 90s, and has closed over $3 billion in deals. He's seen it all. He always has an opinion, and he's always ready to share it. Informed, entertaining, and connected, he has his finger on the pulse of South Florida's business community. He's Jim Freed, and this is Freed on Business.
Hey everybody, welcome to another edition of Freed on Business. This one we're doing remote from my favorite place, Zach the Baker in Wynwood. We've got my favorite guest on, KC Conway, the Red Shoe Economist. Hey KC, how are you?
I'm great.
Got anybody running for elected office up there that you know?
we're thinking of running our Beagle. Our little town has been plagued with so many corruption scandals. I'm thinking of running our Beagle puppy as the new city councilman for a vacated seat. We'll see if we can get it done. Charlie D. Dog for city council.
Kindness counts. Kindness counts. We're going to have KC on. We're going to talk about the ABCs of real estate. KC, what are the ABCs of real estate?
So it's kind of back to the basics, or the 3 R's. We're back to school season here, which is researching. When our kids go back, we need to keep researching what's going on. You're good about getting out the market. The R is rates. You're helping people all the time with rates, but it's more than just cap rates. It's interest rates. It's all of the things that affect the valuation of real estate. And the last one is Rithmetic. All right. So how do all these numbers come together? So those are the 3 R's. It's back to the basics and back to school season.
Well, before we get started, I want to give a moment of silence for all the people that made sacrifice in Afghanistan. We all know people that were there. We all know people that made sacrifices, and I'd like to take a moment to honor them all. All right, KC, we'll be right back with KC Conway and the ABCs of commercial real estate post-pandemic version. After this, Reagan, rock the world. Before I go, hey, we're South Florida's longest running business talk show. We've been on since 2008. We've had Warren Henry as a sponsor since 2012. We want to thank our friends at Warren Henry. When you're looking to buy or lease a car, you want to get every advantage that you can. That's why you check out Warren Henry Land Rover, Range Rover, Infiniti, and Jaguar up at 151st and Biscayne. I was up there this week having some coffee and asking them some questions. It's great. I love it up there. It's like my home away from home. Up in Gainesville, they sell Audis up on Main Street up there, north side of town. Down in the Keys, they've got a beautiful store down there that sells all the nameplates. What do they all have in common? All those cars are great cars, but they also come with the Warren Henry Advantage. That means you get complimentary dent repair. Oh, I'm giving the old thing. It gives you a bunch of services, including my favorite, which is the 72-hour exchange. You can take 3 days to make sure you like your car. If you don't, you can return it. Nobody returns them. They always like their car. So join me, my mom, and my beautiful wife, Vivian. We're all members of the Warren Henry family. You should be too. Always the best price. Always the best service, always Warren Henry. Hey everybody, I'm Jim Freed, and call me because I've got a new program for you. My partners in New York have teamed up with me in a family office in New York to offer new construction financing, ground up financing for hotels, apartments, and resorts. Call me for more information. We can go from $40 to $70 million. Recourse is negotiable. So call me or DM me. And remember, whenever you reach out to me, it's always all about you.
Welcome back to Freed on Business. Connect with us on LinkedIn, YouTube, Facebook, and Twitter at Jim Freed or at Freed on Business, and on Instagram at Jim Freed1. Now, back to your host, Jim Freed.
All right, we're on with KC Conway today. KC, thanks for being on the show. We appreciate you all the time. We advertised it as return to school, the A, B's, and C's, really the 3 R's of real estate. Let's talk about the first R. Tell me a little bit about what's going on with the first R.
The first R is researching. So we know as we, thought we were coming out of COVID, now we got Delta strain. We had states open, states looking at going back. All the metrics have changed. Who cares about percentage rent? Who cares about parking ratios at shopping centers when we all do e-commerce? All the metrics that we used to think of and analyze real estate are changing. So we need to go back and do our researching and find things like the Castle Back to Office Index that tells us what's happening and how many of us are going back to work. The new number posted yesterday is only 31% back to office. There's a new LMI, a Logistics Managers Index. It is phenomenal, telling us about what's really going on with supply chain. Just don't pay attention to the bad government data. Look at the private industry data. So we got to go back and do our research homework. Throw away the microfiche cards. This is a grown-up digital world. Get out there, inspect the real estate, inspect the markets, just like you do every day, Jim.
Well, I had to put on my mask. People got close to me. That's part of what's going on. My 1:30 appointment canceled because she didn't want to meet in person, even though we're going to be meeting outdoors. So it really is kind of interesting to see what's going on and how it's evolving everywhere. And I saw a restaurant owner in New York interviewed, and he said that he's disappointed that the food and beverage industry and hospitality industry takes it on the chin whenever this happens. I don't know what you do. How many takeout cocktails and how many takeout meals can you do before you just can't survive as a restaurant anymore? And then they say that they can't hire anybody. They wonder why. It's not unemployment benefits. It's the fact that people are afraid to go face to face with other people on a random basis.
No, you're right, Jim. I mean, I went down to the Gulf Coast there, and we had at the end of May 4 days of vacation. I spoke at a conference, nice 5-star resort, compliment of the conference I was speaking at. 2 of the 4 days we were there, none of the restaurants could open because of no staffing to do it. And so you're even in a state that's opened up and whatnot. The other thing that much of the workforce, particularly in the leisure, the hospitality, the retail, the first responders, they need daycare. They need kids back in school. And so we're trying to do that right now. But with this Delta strain, I know I'm here in Atlanta. We're looking at probably sending the kids home here again in the next 4 to 8 weeks. And then what do mom and dad do? So this labor issue is huge. I think it's going to continue to affect things like inflation and debates over stimulus and absorption of real estate and all of that type stuff.
How about the folks shifting jobs? Because people are looking to go from facing the public to working from home. Is there enough I don't want to say homebound, but I'll say it, homebound labor, homebound opportunity that the economy could pivot and employ those people?
No, what people don't realize is about 45% of our workforce and our economy have to show up. They got to drive a truck. They got to be a doctor. They got to be a nurse. They've got to be a TSA person. They've got to be at retail. They got to be in supply chain, transportation.
People want to meet me. They want to shake my hand.
Well, then our part of the business, we do want to have the relationship side, and so I've started to travel and go to conferences. And I got COVID twice. I'm hoping I don't go for the third time. But I have underlying health issues that precluded me from taking the Moderna and Pfizer vaccinations. So the only gamble was on the J&J one. And so I broke down and went ahead and got it because I was watching today where the airlines are probably going to go to requiring proof of vaccination to get on an airplane. United,
really?
Frontier, and Hawaiian Airlines already require vaccination to fly on their airline.
I actually have to say I'm quite comforted by that because we won't travel. Now maybe we'll travel. My wife, she's going to get the third shot. And I'd like to say that everybody should make sure they don't go get the third shot right now because the third shot ain't ready right now. Right. Third shot, the formulation you'll have ain't going to be able to fight Delta variant again.
Well, we do know this. Look, we're stuck at about 50% vaccinated, and we're just one part of the world that's doing a good job. The rest of the world, globally, we're only 2% vaccinated. So
let's talk about that.
We could get 100% here, And if we want to be part of the global community and the supply chain and all that kind of stuff, it's not
supply
just
chain. The disease is shutting down China again. What's going to happen? What's going to happen?
We're going to, go buy toilet paper now. We're already going to have toilet paper shortages. Why do you think Walmart earnings are so good right now? They got restocked and they busted it. And then the earnings, I think, are going to go back down.
Christmas. The Christmas toys won't get here.
It's go try to buy a bike. Hey, I got a pool in the backyard. We haven't been able to get chlorine all summer. So even with the salt conversion, we can't find salt to put in the pool for the salt chlorinator. Just everything is, and it's not that our supply chain isn't working. Our ports are breaking records. Port of LA, Long Beach, they just broke a record, a 114-year record for the first time to ever move 1 million containers in 1 month. Savannah and the Georgia Port Authority is going to break 5 million containers. Charleston is setting records. Port Everglades is setting records. Our railroads are doing an incredible job despite all of the complexities and things like impending tropical storms and hurricanes. So our logistics supply chain, our ports, our railroads, all of those, hip bone connected to the leg bone, connected to the foot bone, are working. The problem is the water in the spigot. And all that water is in Asia that manufactures too much of our stuff, and we can't get it here.
Unbelievable. So we've talked about this in the past about, I don't want to call it onshoring, more like nearshoring, I think we call it, right? Moving it to Mexico and bringing it in through New Orleans and Tampa and Mobile.
So we got the new NAFTA too, the USMCA agreement, which really fixed things between Canada and Mexico. Mexico's wage rates are less than Asia's. We're looking at the merger with Kansas City Southern. We don't, it's a coin toss with Canada, Canadian National, Canadian Pacific, Canadian National, Canadian Pacific. But that creates the true North American Class 1 railroad from the deepest parts of Canada, the deepest parts of Mexico. You can in Mexico, you can get anything EPA's permitted and certified. We're still, battling that in America. That's why we don't have chips for the damn cars that are being made, is because we haven't made many chip factories in the United States, and they're all in Asia. So GM has got, tens of thousands of new SUVs and Tahoes and Suburbans, and Ford, over 40,000 F-150 trucks that they can't deliver because there's no chips to go in the car. And
unbelievable. And those were all made in Taiwan by that one semiconductor firm?
That's the primary one. But there's other chip factories that could be retrofitted in throughout Asia, but we just haven't done it. And if we had to go through California to get one permitted, it might take another 5 years. So you may see some chip factories and manufacturing in Florida. It's an opportunity, and it's a clean industry.
Yeah, but it takes a lot of water, right?
Yeah, desalinate.
Come on, we have water issues here.
Desalinate, buddy.
Oh my God, you're too funny. We're going to take a quick break, and then we're going to be back with more insights from my good friend, KC Conway. We're treading lightly on the political part because it unfortunately does impact the economic part. But we'll talk more about interest rates right after this. Reagan, it's yours. Everybody, we're South Florida's longest running business talk show. We've been on the air since 2008 through all kinds of recessions and now a pandemic. Our big sponsors, Warren Henry, they've been with us since 2012. I want to thank Larry Zinn, Eric J., and Samantha Wolf and all the rest there, Abe Cohn, all of our friends at Warren Henry. Without them, we wouldn't have a podcast this good, and we wouldn't have guests like KC getting their word out. Remember, when you're looking to buy or lease a car, you want to get every advantage that you can. That's why you have to check out Warren Henry. Land Rover, Range Rover, Infiniti, and Jaguar up at 151st and Biscayne. Up in Gainesville, they sell their Audi cars. Down in the Keys, well, they've got all their great nameplates down there. What do all the cars have in common? Well, they're all great cars. They all come with the Warren Henry advantage. That means you get complimentary dent repair, key replacement, all kinds of great features, and you also get the 72-hour exchange. You can take 3 days to make sure you like your car. Guess what? You will. So join me, my mom, my beautiful wife Vivian, and lots of my friends and clients. Casey, we're going to get you down here too. All of them are Warren Henry family members. Always the best price, always the best service, always Warren Henry.
Carlson from Carlson Integrated. You know, a lot of our clients find that they can do anything, but not really everything. We are always excited to jump in and help. So whether you need another set of hands for a project or even comprehensive marketing management, our team of marketing mavens would love to have a conversation with you to see if we are the right fit. We do everything from logo and design work to email outreach and social media to writing and thought leadership. And here's a fun one. We are now offering our fabulous ebook of top 10 marketing tips on our website for free. So head over to carlsonintegrated.com and grab a copy today. And please always let us know how we can help. My email is Becca, that's BEKAH at carlsonintegrated.com. That's BEKAH at carlsonintegrated.com.
She's tremendous. She's going to help me roll out my new loan program. We're going to develop the materials, and then we're going to generate some good questions to have on the show, and then we're going to send it all out to everybody. So look out there. And remember, I'm now working with a New York-based family office, and we're placing construction money. We have construction money available from $40 to $70 million for hospitality, resort, and multifamily. So give me a call. It's limited recourse. Pricing is $300 over LIBOR for the apartments, and $600 over LIBOR for the resort and hospitality. LTVs, LTCs are upwards of 70%, and we can arrange a mezz that'll take you all the way to the top. So give me a call if you're looking to capitalize your real estate deal or your real estate company. Reach out to me. Why? Because when you call me, it is always all about you.
Welcome back to Freed on Business. Connect with us on LinkedIn, YouTube, Facebook, and Twitter at Jim Freed or at Freed on Business, and on Instagram at Jim Freed1. Now, back to your host, Jim Freed.
Hey everybody, we're back with my good friend KC Conway, the Red Shoe Economist. Hey KC, how you doing?
I'm doing good. I wanted you to know, and your audience know, Jim, I do have now 2 pairs of red shoes. So these, when we get to talk to inflation, are my new inflation shoes. See, they got that spring, so I can leap tall price increases. And then these are what you do every day. The Nike Just Get Her Done red shoes. These are my Just Get Her Done while we still can red shoes.
Now, are those slip-ons, KC?
Of course. I'm almost 60. And, you know, when you get 60 and older, you get shoes like your kids used to have.
Oh, mine are slip-ons too. I love them.
Slip-ons. I can't do laces anymore. I'm a slip-on guy.
I don't want to waste time on laces. That's 5 minutes a day.
Or Velcro. You know, you get older, you got to Velcro everything together.
Oh, the slip-ons are the best. I got to get out there and get one of them red shoes myself. That was really cool looking. So, listen, interest rates are a function of supply and demand of money and a little bit of political intervention. We got all kinds of people needing money. We got the government printing money. They're basically paying people to buy or refinance their home or their apartment building. But inflation's on the horizon. And interest rates are really inflation plus the expected yield that you want to get. So that means that rates are going to go up if inflation goes up, unless demand is so strong for the real estate that the cap rates stay compressed. Now that I put the rails out, drive the truck through.
So I'll give a tee up to the inflation talk. So good friend of mine, Jim Baker of CCIM, wrote a book about 2 years ago called Confessions of a Real Estate Broker. And it's organized where he tells his life story through every day of the year, all 365 days. So I always look at this every day to get perspective if I'm doing something. So today is August 18th, and this is, in his life, measure twice and cut once. Translated for the Fed, keep measuring and cut to infinity and beyond. They don't know what else to do. And tomorrow, though, is diversity and changing demographics. That's a heck of a part of the Florida story of what's going on with real estate, the economy, and finance. But you're exactly right, Jim. We should be seeing a 10-year Treasury moving up and interest rates moving up, but we're not. And so people say, what the heck's going on? Well, the Fed is intervening. They're buying up the bonds at higher prices. So they outbid everybody to keep the rates low to hopefully keep this thing afloat. Well, they've added over $2 trillion just in mortgage-backed securities. Now they all have the bright idea that they want to taper that. What the heck do they think is going to happen when they quit buying these securities? The market's going to discover its own natural level, and we're going to have another, taper tantrum or whatever, going above 3%. And my forecast is when the Fed quits using the balance sheet, quits adding trillions and trillions to its balance sheet, which means they call Treasury and say print money, we're going to see a real discovery of interest rates. In the meantime, what their monetary policy is doing is it's inflating asset prices. So I would rather maybe have a little higher interest rates that I can deduct than my home and the value of the asset I'm trying to buy going up 10, 20 or more in your parts of the world, 30+% a year, because it doesn't matter what the interest rate is. It could be zero. I can't afford the doggone place. So this monetary policy in the Fed and this inflation story is probably the most significant thing we're going to have to deal with the next 6 months to 2 years. And I'm in the camp. This is shaping up to be another 1977 to 81. Let me give you the background on that. So look at what happened going into 1977, where Volcker and Jimmy Carter and them took interest rates, prime interest rate to 21%, and the 10-year Treasury went above 15%.
I was right in college. The reason I got my MBA was because I graduated in 82.
Yeah. So here's what happened. These things take a long time to gestate. You got to get the seed, you got to germinate it, you got to cultivate and fertilize the soil. So here's what happened. In the 1960s, we had deficit spending for Vietnam War. We had Richard Nixon come in. He said, how do I deal with this? I got a great idea. I'll just put price controls in. Ta-da, inflation solved. Then we have a political crisis. He kind of happens to eavesdrop on some people he shouldn't have been eavesdropping on. So we have a political crisis, kind of sound cool, like we've had in the last
gas crisis.
Gas crisis. Yeah. Then we have an oil embargo that caused energy. We were so dependent on energy, home heating oil, cars that only got 8 to 10 miles a gallon, that it created this huge inflationary spiral throughout the whole economy. And we went off the gold standard. So there was nothing backing the dollar. So all of these things happened. Now look at today. So we have deficit spending out of control, worse than ever in the 1960s or Vietnam or the Ronald Reagan, not the Reagan-Mendoza era. Reagan-Mendoza would never do that.
It's Reagan-Mendoza.
Reagan, I'm sorry. I changed him. He's got to have a good Republican name, right? Oops.
Hey, now we talk business here, but we're bicameral. We're everybody. We don't.
Hey,
have
I like Tip O'Neill as much as I liked Ronald Reagan. They figured out how to get things done. They Nike'd it. They just got it done. But anyway, They got it done. So now think of this supply chain crisis from COVID. It is the same thing as the oil embargo shock and the energy crisis causing inflation. And these things don't resolve overnight. They're not transitory. That's a new made-up term by our Fed. These are systemic. It's going to take years to build the chip capacity that we need. It's going to take years to fix the supply chain. It's going to take years to provide the affordable housing inventory to bring home prices down back to their historic average of 2-3% appreciation a year. So we're in a mess. The Fed has it all wrong. I'm really afraid that this is the 1970s. So how do we prepare for it? The first thing is to recognize it. The second thing is to develop a plan. And my recommendation right now is just refi. If you're thinking of doing a transaction, buying an asset or whatnot, now is the time. These rates are never a 126 on the 10-year when we have 6 and 7% inflation. 6%, 6.5% CPI.
You're making money by buying the asset on margin.
Look at replacement costs. You buy a house today and you got multiple offers. You could flip it back. The same thing's happening in cars. People are going into dealerships when inventory comes in on their wait list, and they'll buy the car, but they'll never take it off the lot. They'll flip it, just like home flipping. We have new car flipping. Talk to Auto Nation about what's happening with people reselling their contract to buy a new piece of inventory. So these things all spiral, and they take a long time to resolve. And I think that's where we're at. So if you look at the replacement costs of replacing a house or a condo or an office building, it's much more. than buying trying to buy an existing asset or wait through the inflation, or doing an adaptive reuse deal like Wynwood or what they're doing in
Durant. You can't do anything. You really can't do anything unless you're a big buyer and you have the ability to marshal the resources towards you as a regular customer. Individuals are going to have a very difficult time right now. Smaller deals will have a very difficult time right now. You know, it's really people looking to do volume and knock as much of it out of the park as they possibly can. There really isn't a solution for affordable housing that's simple. You know, there really isn't. I'm involved right now with helping people to resolve their condominium problems. And the real issue is where are they going to go when you give them their 2 times, 3 times market value for their property? And that's what you pay them.
And here's the
value, the market value of today's property.
And here's the real problem on affordable housing. It isn't that developers don't want to develop it. It's not that they don't know how to do the densities or blend things like a manufactured home in a 4 or 5 store community, which you can put someone in for $100,000 instead of $250,000 to build a new apartment. The problem is local government. And local government code doesn't want affordable housing. They have this misperception that affordable is crime-ridden and blight. And we know, I mean, you can go and find manufactured home communities in nice areas of Sarasota that serve retirees. There's a whole spectrum that serve workforce. I'm on a REIT where the sister REIT is UMH, United Manufactured Housing. They've been doing it for 50 years. They take communities and they fix them. They develop new ones. The problem is we can only get maybe 100,000 manufactured home lots permitted in this country, and we have demand for over 500,000. Look at what's happening with homes for rent, new subdivisions. Go to Central Florida and Orlando and look up an American Homes for rent situation. I was just told yesterday they've got something like 3,000 or 4,000 units in the Metro Orlando area, and they have 6 vacancies. So, you know, if you can't get anything, you may be renting it all. That's what I'm saying. You got to research what's going on. You got to get out there and look at what's going on like you do, Jim. And you got to do your homework again, because what we thought before COVID and the metrics, they're all changing. They're all different today.
One of the guys I'm working with now is bringing in manufactured housing that's used in Europe to do ecotourism. And we're going to try to put them on city-owned government land as soon as I can get them over here from Europe. So there are solutions out there. I know people are working on more affordable materials that are strong, but it takes time. And resolve the situation will be very difficult in a reasonable and short period of time. What do you think the solution is for the interest rates compression? We're gonna let them go and then they're gonna float. They float up to where they're going to be. They're really going to damage some people who don't know how to handle that. They haven't seen interest rates in the 20s in 40 years.
This is like a once every half century, kind of like, you know, you have a 100-year floodplain zone where we have a every 50-year systemic inflation crisis. And this is that one. Most CFOs and whatnot in major companies, they never were around. They've never seen this type of inflation. They don't know what to do. And they don't realize that what ultimately happens is very high price increases. And eventually it gets so out of control and is so systemic, you have to essentially shut down the damn economy. And that's what Paul Volcker did. He said, the only way I know to stop this thing is shut down the economy. So here's the hope for places like Florida, Texas, the Carolinas, maybe Tennessee. Those that entered the 1970s and 76, 77, 81 inflation crisis, they had one thing going for them. They had growth. And the only way to get through this is you can grow through it. You can grow rents. You can grow the asset value and afford the higher expenses. And so Florida, you're one of those places that's got the growth. Everybody wants to be in there. I just have a millennial daughter that just got hired in Sarasota and got her first apartment in Bradenton. It was hard as heck to find one. She's shocked at how much it costs. But I remind her, hey, you're not paying any income taxes like dear old dad up here in Georgia. But that's the hope that you guys have, is that you've got growth, and it's not just in Miami or Orlando, it's statewide. You have all the foundation elements. You have great logistics, great ports, nice weather, skilled workforce. You have all the foundation elements to grow through this crisis. But places like New York, Illinois, California, not so much. So there's the hope I'll give for you in Florida, is you have the one thing that can get you through an inflation cycle, and that's growth.
Wow, that's tremendous. We're going to leave it right there. Regan will take us to break. And when we come back, Casey and I will go through the different product types and how they'll be impacted by the future inflation and current market conditions. Mr. Mendoza, it's yours. All right, this is the part of the show where I remind everybody we're South Florida's longest running business talk show. I'm here at my office today at Zach the Baker in Wynwood, and we're talking with KC Conway about the economy. Our sponsors are Warren Henry. They've been with us since 2012. Remember, when you're looking to buy or lease a car, you want to get every advantage that you can. That's why you have to check out Warren Henry. Land Rover, Range Rover, Infiniti, and Jaguar up at 151st and Biscayne. Up in Gainesville, they sell Audis. Down in the Keys, all kinds of great nameplates. What do all the cars have in common? Well, they're all great cars, and they all come with the Warren Henry advantage. That means you get complimentary services up and down, from a service loaner all the way down to my favorite, the 72-hour exchange. You can take 3 days to make sure you like your car. You will. No one returns them. They love them. They're great cars. Join me, my mom, my wife, my friends. We're all members of the Warren Henry family. You should be too. Always the best price, always the best service, always Warren Henry. Oh, there you go. You hear her talking about kindness. She does it for me. She really works with me on all my projects. She's really great. She puts my marketing together. It's been a great business relationship with Rebecca Carlson. Call me if I can help you or your family. I'm working with a big family out of New York to help them put out $300 million of first mortgages, or rather construction financing for hotels, resorts, and apartments. Give me a call on that one. I've got all kinds of other creative capital. So reach out to me and I'll help you. I'll help your family put together a business. We're doing multifamily. We're doing condo conversion. We're doing retail. We're doing it all. Call me. DM me. Why? Because when you call me, it's always all about you.
Welcome back to Freed on Business. Connect with us on LinkedIn, YouTube, Facebook, and Twitter at Jim Freed or at Freed on Business, and on Instagram at Jim Freed1. Now, back to your host, Jim Freed.
Maintaining social distance while I do the radio show. I hope everybody's fine, and now we know the impact of coronavirus on everybody, don't we? Sorry about the contrast. There's nothing I can do about that right now. So we're here with KC Conway. KC's the head economist for the CCIMs. He runs Red Shoe Economist Consulting up in Atlanta. He does real estate consulting all over the country for some of the top people, and he sits on the board of at least one REIT. Welcome back to the show, KC.
Thanks, Jim.
Sorry about the variability of what we're doing here, but it is what it is.
It's the new world. It's okay.
It's the new world. And what I showed is the most important thing. I'm flexible.
Yep. You're right. You've got to do it. You've got to adapt or just go away. And especially in commercial real estate, whether you're doing brokerage or property management or finance or construction, you just have to adapt. And if we haven't learned the adaptation message from COVID, we haven't learned anything.
Yep. Even the people that were sitting next to me are adapting. They're moving. So, so KC, let's talk now about the different product types. You know, everybody wants cash flow. Everybody loves multifamily. Everybody loves industrial. If you own industrial, you're never going to sell it, et cetera, et cetera, et cetera. I can move back now. So KC, what's the product type? You know, you sit on an industrial REIT, so you like industrial. Talk about industrial for a second.
So industrial is a fun one because it's Florida does it great. People think because it doesn't have a port that does 6 million containers, it has 13 ports that do more than if you put probably Georgia and South Carolina together. So give it some good old Rodney Dangerfield RESPCT. But the logistics story is phenomenal, Florida. Port Everglades is your big story because that's where the Homeland Security wants the containers to go. They've got a great new logistics center they developed. You got a great port director. All of that stuff is moving up into the what I call the inland empire of Florida, which is Central Florida, Winter Haven, all the way to Plant City.
Hold on, that's a big engine in Miami that's moving. So that's a lot of jobs that are related to the stevedores and everything else over at the port. So is the Miami port contracting? What's going on?
No, it's not contracting, but look at the Homeland Security doesn't want to be commingling shipping containers with cruise ships.
I wonder why.
And so really, they're both in the same customs district. So a lot of times the container count of Everglades and Miami get combined, but Everglades is the leader with over 1 million containers. Jacksonville's just about there, or maybe a little bit above because of Puerto Rico. Because of the Jones Act, they're having to supply everything to Puerto Rico still today, and all these devastating tropical storms and hurricanes over that part of the world south of you. But it's a great story, and what we're seeing is, we're building 350 million square feet of new warehouse a year right now. We could build 500 and not meet the demand. We're at 2-3% vacancy rates. These buildings that used to cost under $100 a square foot now are approaching $200 a square foot because higher ceilings, specialized concrete floors for the robotics. There's a lot that goes into these things, and they're used 24/7. So, the assets
people.
No, that's a big story with Amazon. So as we find that we can't get workforce, and the costs are up and healthcare costs are up, we're seeing more robotics. Here in Atlanta, Amazon just opened up its first 100% robotic e-commerce fulfillment store. And they conned the local jurisdiction into letting them develop in a residential neighborhood between an industrial park and residential, promising hundreds of jobs, and they're delivering maybe 50 to 100. So we got to be careful in giveaways and not give away the farm. New York and them have been really bad about doing this. So don't give away the farm. Here's the story on logistics. Amazon, FedEx, Home Depot, all these retailers, all these logistics companies, they know where the packages are going. They know that everybody's moving to Florida. They're setting up a new residence, and they're doing a lot of online shopping and grocery shopping and everything else. So they know where the package density is, and whether you give them an incentive or not, they have to be there. And so they're coming whether you give them an incentive or not. So why give the damn farm away and ruin your fiscal situation? So these assets, too, are trading at increasing values. The cap rates now are down into the 4% range, low 4% range. I'm on a independent director on a REIT, Monmouth. We're in the middle of a merger with EQC, which is Sam Zell's company. He just increased his offer very substantially on Monday of this week. We also had an announcement last week of Blackstone buying WRT out of Canada, an industrial REIT. We have Kansas City Southern in a potential rail merger between the Canadian railroads. All the logistics assets are compressing. We're seeing in the commercial property price indices, whether it's Green Street or RCA, 15, 20% annual property price appreciations. There's just not a bad story. And the solving last mile logistics means that we're going to have to repurpose some of these big box stores that are where the packages go. So it's called retail to industrial conversion. Forget the malls, but these big box stores like a closed Toys R Us, Kmart, Best Buy, Amazon's coming in. They're buying these and they're making them staging areas for the last mile logistics. So it's just a tremendous story. I have a course on it with the CCIM Institute. I just wrote a new paper for the CCIM Institute. It's at ccim.com/insights. So it's just a great story. Can't say enough good things about industrial.
So how do the retail shoppers deal with the increased truck traffic in a shopping center where Amazon has become the anchor? And I guess I answered the question. Walmart already does it.
Yeah. So, you have two models out there. The Amazon one is they're going to deliver to everybody's home. It's the business to consumer model. And so what they're doing in these retail to industrial conversions is they're doing staging at night. And these aren't big tractor trailers. They're smaller delivery trucks that move through your neighborhood. And they're bringing things in from the big warehouse and they're staging for the next day to have light delivery. So it's a misnomer that you have all this horrible truck traffic. The other model is BOPIS, BOPIS, buy online, pick up in store. That's the Walmart model. That's the grocery store model. The problem is they never anticipated picking up in drive-through lanes like you're at a fast food restaurant. So that means they need to take parking spaces out. Well, to take parking spaces out, that violates the zoning ordinance. It violates the zoning ordinance, and you redo it. Now you got to modify the lease. Then you got to modify the loan. So it's kind of like if you give a mouse a cookie, then he's going to want a glass of milk, and he's going to want a nap. It never ends. So here's what they're doing. They're getting rid of the garden centers on the sides of these big boxes. And now they're staging all of the pickup. So you can put all the stuff right there by the garden center. You can loop around. You don't affect any parking spaces. So that's why I say
garden center has a big door from the in-store inside to the outside, a bigger store than they normally would.
So that's why what you do, go out. You got to look at what's going on. You got to look at how they're adapting to know how it relates maybe to your property, your portfolio, or what to look at. Because if you have a big box or, a Walmart, an old Walmart store that doesn't have the garden center, and not all of them do, it's going to be harder to do buy online, pick up in store. So that's how they're dealing with it.
You know what else is really interesting, especially here in Miami? If you live in the urban core, you don't see any of this going on. You have to go out to the suburban neighborhoods, really far out west to Doral, or even farther west of the Turnpike. And that's where these more modern buildings are going. I went and walked through one with the guy that's doing the modular housing because we're looking for a place for him to buy for a factory. And the change in the type of facility is dramatic. And you can see it when you go from a 70s era building to a 90s era building to a building from today. It's just such dramatic differences. CBS to tilt up to I don't know what anymore.
Well, and in these big modern facilities, we used to build warehouses with a land to building ratio of 4 or 5 to 1. It's now doubled. It's 10 to 1 because these folks don't want to have to outgrow the space in 10 years and then have to move and build again now at $400 a square foot. They also, so they're planning in their expansion. They're also building in redundancy in refueling. So we just did one with Home Depot here in Georgia, and we built in 3 types of refueling stations. We did the electric for the truck batteries, it's coming. We did LNG gas, and we're doing hydrogen. So we built 3 different pipes that took up 20 acres of land on the 120-acre parcel to plan ahead. So that's why you're going to have out in the suburbs, we can still maybe get some land, or you can assemble through, taking down an old mall or something. But when you get into the urban cores, there's another option that's developing. And FedEx has been pretty smart about this. They're partnering with Dollar General. And FedEx is basically consolidating or closing most of its retail stores where you drop off or pick up a package, and they're putting them in Dollar General. So now if I'm in a neighborhood where I'm concerned about my package, maybe I got a neighbor with a bad dog that might come tear it apart on the front porch or the back deck, I can now have that package delivered to my neighborhood Dollar General store. I can pick it up. It's safe. And these Dollar Generals now are putting in as much as 25% of the floor area with refrigeration for your milk and for your vegetables. So the retail store, the things that we think they're all obsolete, Dollar General, no e-commerce,
Gets me into Dollar General. Yeah. Geniuses.
Yeah.
We're going to be back with more of Casey's Insights right after this. It's time for Reagan to play some music and for me to sell some cars. Is that okay, Casey?
All right, let's sell. Let's do it.
We're going to do it. We're doing it. Mr. Mendoza. All right, this is where I remind everybody we're South Florida's longest running business talk show. We've been on since 2008. Our sponsor since 2012 is our friends at Warren Henry. Thank you to our friends at Warren Henry for sponsoring this show. Remember, when you're looking to buy or lease a car, you want to get every advantage that you can. That's why you have to check out Warren Henry, Land Rover, Range Rover, Infiniti, and Jaguar. Up in Gainesville, they sell Audis. Down in the Keys, they got them all. What do they all have in common? Well, they're all great cars, and they all come with the Warren Henry advantage. That means you get complimentary loaner car all the way down. They give you a key replacement. They'll give you the best price guarantee. And my favorite is the 72-hour exchange. You can take 3 days to make sure you like your car. Guess what? You will. Join me, my mom, my beautiful wife, Vivian. Lots of my friends. We're all members of the Warren Henry family. You should be, too. Always the best price. Always the best service. Always Warren Henry.
Carlson from Carlson Integrated. You know, a lot of our clients find that they can do anything, but not really everything. We are always excited to jump in and help. So whether you need another set of hands for a project or even comprehensive marketing management, our team of marketing mavens would love to have a conversation with you to see if we are the right fit. We do everything from logo and design work to email outreach and social media to writing and thought leadership. And here's a fun one. We are now offering our fabulous ebook of top 10 marketing tips on our website for free. So head over to carlsonintegrated.com and grab a copy today. And please always let us know how we can help. My email is Becca, that's BEKAH at carlsonintegrated.com. That's BEKAH at carlsonintegrated.com.
All right, and I'm Jim Freed. Rebecca helps me with all my marketing. She's tremendous. Give her a call. Give me a call if I can help you with financing. I'm working on some tremendous new programs where I'm able to finance multifamily, resort, and hotel ground-up construction. Reach out to me for information. Transaction size $40 to $70 million. Will go up or down depending on the quality of the sponsor and transaction. Rates are 300 over LIBOR for the multi, 600 over LIBOR for the resort and hospitality. Call me. Recourse can be negotiated. DM me. That's right. The real estate markets are wide open, and I'm doing lots of deals with my friends out of New York. So why call me? When you call me, it's always all about you.
Welcome back to Freed on Business. Connect with us on LinkedIn, YouTube, Facebook, and Twitter at Jim Freed or at Freed on Business, and on Instagram at Jim Freed1. Now, back to your host, Jim Freed.
All right, we're here with KC Conway. We've had KC on the whole show. This is the fourth quarter. We're on with KC. And so, KC, now it's the fourth quarter. We've talked about interest rates are going to go up, or should go up. We've talked about inflation on the way. We've talked about the hot markets are going to be the ones that continue to grow. The cold markets will be the ones that are up in the Northeast with lots of operational issues. But New York seems to be resilient. Why won't New York? Well, New York will come back. People still want to be in New York, right?
You know, I don't know, Jim. I'm not in the camp. I won't travel. I've been asked to travel up. I won't go it. I know many of my, I've had over 150 colleagues that have left in the last 6 to 9 months, and they've moved to Florida and North Carolina, and they're not going back, and they left their furniture and stuff. So I'm not in the camp. I think there's a much, you know, when you're looking at a 14% state sales tax versus none in Florida, when you're looking at nice weather, when you're looking at businesses being open, you're looking at growth. What we're seeing, if you talk to the retail canvassing queen or you talk to Barry Wolf, all good colleagues, you know, they're not singing, you know, a blues song at all here. But when I talk to colleagues and folks and business owners in the Northeast, Chicago, you know, I was just up in Chicago and I was in for a conference, and I came in on a Monday. In the weekend before, they had 77 shootings. It's so bad you can't have your Uber deliver you to a downtown hotel, because at night, kind of the gangs and whatnot, they go through the drive-through of the hotel and they shoot up the lobby. It was unsafe to take the L to go out to Wrigley Field for a ball game.
Are you kidding?
It's a mess. And, you know, it was right after I left, they had the Wallapalooza Festival, and it looked like what my perception would have been of Eastern Berlin before the fall of the wall. You know, all these iron rod fences look like prison with barbed wire that were quarantining off the parks and the museums from the chaos. Now go visit Florida. I don't see that kind of stuff, and I don't think businesses, and I think people that want to raise their families don't do it. So I'm not a bull on New York or New Jersey, but I sure as heck am a bull on. And you look at the south, really from Texas. If you drew a line from Texas about Virginia and looked at everything south, look at whether it's the moving migration reports from U-Haul or Van Line, you look at the new census data. And by the way, important date for your audience, circle August. I guess we just got it, August 16th. So 2 days behind. I've been doing so much court work. We just got a new deep dive into the census data that really goes a lot deeper than what we've got. Florida, tied for number 5, most amount of population growth in the last decade. You had Texas and Washington and Colorado and whatnot in Florida. It was the big 14.6% population growth. The next census, try doubling that. It could be 20-25% growth.
That's why I'm working with my friends to develop Publixes throughout the state of Florida. We've got a program where we're helping them raise the equity and the debt for new Publix center development. It's very exciting. So,
so on your Publix client, here's a shout out to your Publix client. They do their homework. Number one, they take care of people. They were the first to figure out have the first hours open for senior citizens during COVID, so the store was clean. They have a lot of their own supply chain. They go organic. They're not dependent. They grow things in Florida. They source them locally. So here's another one down in Coral Gables. They just acquired an older retail center, and two lenders turned down their deal to do the construction loan because the equivalent price per square foot for the land was $350 a square foot. And they said, no way will you get enough same-store sales to justify that price. And Publix just shook their head and they said, it's not about same-store sales. It's about e-commerce sales. We could pay $400 or $500 a square foot when we look at our broader reach and how we're doing. That's why I talk about back to the basics. Do your homework, do your research, redo your arithmetic. You got to look at new metrics. It's not same-store sales. It's e-commerce sales. It's adaptive reuse. So your Publix folks know what the hell they're doing.
Wow, that's stuff. Who would be another good business down here that's smart in real estate, KC?
So you're on your your single family rental home development. So American Homes for Rent has come in big time. They can pay about 15 to 20% more for the land or a finished lot than a typical public home builder because it's a business. They're renting homes. They make more money. They get a higher density. And look at the numbers, 3,000 to 4,000 units in the Orlando metropolitan area. They have 6 vacancies. And this is across the country. Land. We had forgotten about land. We thought land was a bad 4-letter word. And when you look at the scarcity of it, particularly there in Florida, the entitlements, the cost, land prices are just going through the roof.
I'm in the process of doing a land loan. I did one a couple of months ago. I'm in the process of doing another one with institutions. I have institutional lenders that are giving incredible land loans to people because they're smart.
Yeah,
they're smart.
Mobile home or manufactured housing parks. I think, on office, you guys need to separate your office story from the rest of the country. Because unlike the rest of the country, which isn't seeing people return to work, they're seeing negative absorption. They're seeing massive record sublet space. You're not seeing that. You're net positive in Miami and South Florida for office absorption. Rental rates are actually going up. They're up year over year. Our friends at Cushman and Wakefield and Colliers have just documented that. They're going to be on a program with me for the Appraisal Institute South Florida chapter on Friday, all day, talking about these numbers. You got the Bright Line. The office assets along the Bright Line have been doubling in value every time they flip because people know if I can be on that Bright Line and I can go from Miami to Orlando and I can be a surgeon or a doctor or a lawyer in one part and travel down in 30 minutes to an hour. The underline, what you're doing in adaptive use, I published that paper we covered on your show. Florida, the neighborhood approach, adaptive use 2.0, Windward, Coral Gables, Doral, the new city of Cutler Bay, the old Cutler Ridge Mall. You guys have really figured out a lot of the pieces. And that's why you're getting the growth. It's not just that you have no income tax. It's that you got all of the other pieces. You have the regular infrastructure, the logistics infrastructure, adaptive reuse. You figure these right pieces out. And here's the other thing. Look at the billions of dollars that California has spent on paralyzing regulation on environmental matters and how mismanaged they did, whether it was the forest and the land and everything else. And then look at Florida in a common sense approach and your environment and the metrics on the environment. Your metrics on the environment, your metrics on common sense and growth speak volumes over what you see in, say, California.
Well, all I can say is that the weather helps too. And if things are contracting up north of the Mason-Dixon line right now, imagine what's going to happen this winter when they don't know what to do with the Delta variant and they're suddenly all inside. See down here, even though it's summertime and you go inside, I'm still outside all day long. So I'm hopefully being able to avoid everything.
Well, and people can go outside. The weather will be cooler. The humidity's down. The winter, the hurricane season will be done. So you can sit outside. You can safely, congregate. By the way, I'll be at the Florida Realtors in Orlando next week. I'm coming in. I'm vaccinated. I've had COVID. I'm wearing my mask. I'm going to do small meetings, not big ones. And we're driving down. We're not taking, the flight down. But like you said, it's a relationship business. We can do it. We can do it smaller. We can do it smarter. You guys will stay open. You'll do business, and business will continue to come there.
100%. It's still about who you know, who you can access, and how you can access them, and if they have something that other people want. I want to thank you so much for being on, KC. What's the last word you want to give everybody?
So if you need to follow anything, the Red Shoe Economics is just at redshoeeconomics.com. Our website's there, all my media, all my presentations, anything on the CCIM, my insight papers, and my new forecast for mid-year are at ccim.com/insights or ccim.com/Sire Magazine, CIRE for commercial investment real estate. The new one is out. The title of it is What a Difference 6 Months Can Make. Look at where we were in January. Look where we are in June or July. I hope that we don't revert back to where we were last January with the Delta variant. But again, this is about a vaccination game and people being smart. You don't have to be, crazy or get into politics. Look at the best thing we can do for our communities and everybody. I did it with all of the risks and underlying health conditions. I went and got vaccinated even though I had COVID. I did it because you know what? To travel or go to places, you're going to have a vaccination or proof of vaccination. Airlines are talking about you won't even be able to get a confirmed seat. You'll be on standby if you don't have a vaccination. So get ready. That I told this a year and a half ago. Vaccination passports or immunity passports would be coming. We're going to have them, and you're going to need them to go to Europe or travel around the world.
They're sitting on my desk right now. Thank you so much, KC Conway, for being on the show. Bless you. I'll hopefully be able to get 5 minutes when you're here. Give me a call. We'll grab coffee outside here at Zach's. You can come and see my whole place. Thank you so much for Reagan Mendoza. Everybody, remember, this is Jim Freed for Freed on Business. Look for us next week at noon. Why? Because I just love doing this. Thanks to our sponsors, especially the folks at Warren Henry and the Bergstrom Center for Real Estate Studies. I want to thank Carlson Integrated also. Thank you, Reagan Mendoza. Next week, we'll be on again at 12 o'clock noon. Reagan will have the show up in just a few minutes on Freed on Business. Remember, the person who wants to do something finds a way. The other finds an excuse. Now go out there and make it happen, KC. God bless you, and God bless America. And I'll say this one more time. God bless the folks that gave the ultimate sacrifice in Afghanistan. We love and respect you, and we'll never forget you. Reagan, take the show.